presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hey, Robert, how you doing, man?
Yes, and thank you for taking my call. I wanted to let you know that I've been a subscriber for a couple of years, just different members of your team, and I really enjoy it. But really the reason I'm calling is to express my sincerest gratitude for you providing that information yesterday on the small business grant. I'm a small business owner and primary breadwinner for my family, and if I can get that money, it's going to really mean a lot to my family. So
that's awesome.
Thank you for taking the time to do that.
No, well, listen, man, we appreciate you growling and prowling with us.
Now, Tom O'Brien.
Good afternoon, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 3 p.m. Eastern Time. We got 53 minutes left to go in the trading day, and you have markets picking up steam to the downside. Right across the board, you have the S&Ps right now off by 1.34%. But, boy, you talk about the Dow. The Russell leading the way down. Dow off 1.4%. Bank stocks lower. We'll get into that. How about the Russell? Off by 2.2% right now. The Russell, 2342. You're almost back to where we were in July of 2024. Yeah, how about that? Within about 22 points of where we were July of 2024 in the Russell. You jump over the Dow right now, 46,564. We put it back on a short-term chart. And, yeah, you see the acceleration. Begins at about 1230. You're trading at 47,245. We're 700 points below that price level, folks. And boy, we got a whole hour almost left in the trading day. Dow off by 1.4% right now. NASDAQ off by 1.3%. And the S&P's off by 1.3% as well. And I mentioned the Russell off by 2.2%. Bitcoin, it's not stopping. We just made session lows in the last 5 minutes or so since 3 o'clock. You're trading right now, Bitcoin off by $2,800, off 3%, 91,550. You jump over to Ethereum, off by 5.6% on Ethereum. Back up Ethereum, folks, and Ethereum's its own animal and has been. Excuse me, but look at this chart. Back to February of 2024, and you just traded from 4,900 to 2,900 in a period of 3 months on Ethereum. Remarkable. You jump over to Coinbase today. Yeah, how about it? Coinbase off by 8.2%. Now, something to keep in mind here is it was quite a run. Okay, when you came into that election, Coinbase was still at 176. All right, you get the crypto president, and it accelerates higher. And basically, we're just now sitting at the top of this bar that you had from when you're talking about Coinbase. And you can make almost the same scenario. You should pull back Bitcoin. Okay, you see the acceleration from the week of November 4th. So all this happened is we've traded back to that first initial move from 66,000 to 92,000 in Bitcoin. We're right back there. And, downward pressure, though, in a big way. The altcoins getting destroyed and buyers struggling to step in. We jump over to the dollar right now, and we got some dollar strength. 99.57 right now. We take a look at the longer-term trajectory. You make a low of 96.21. That was a Fed meeting, I believe, September 17th. We've come a long way since expectations on September 17th, 2 months ago to the day. As in rate cuts in focus, December 10th meeting. Not as likely as they were to undersell that at their last meeting. And right now, we will pull up those marks. I have the pictures up here. Let's take a look at it right now because it's remarkable how quickly we've moved in a month. You take a look at what the market's pricing in right now. About a 45% chance we get a cut. 55% chance no cut. Okay? A month ago, there was a 0% chance that you weren't going to get a cut. Okay? And the only question was whether we were going to get a cut or 2 cuts. Yeah. Now, you go to January. Boy, this is moving. 34% chance we don't get any cuts by January. 0% chance again. So we've changed a lot in a month. Rates on the rise. Dollar catching a little bit of a bid. And that's been a bit of a headwind for gold. And gold is just some selling. And why is it trading lower? Because they're selling it, folks. Look at that volume. 12,700 contracts in gold on a 15-minute basis. At 2:30, you trade from 4,060 down to below 40.20. Let's check out the volume now. Now, here's the thing. On a weekly basis for gold, okay? Let's check out the volume here. You traded higher last week with volume picking up. 1.4 million contracts almost on the gold contract, okay? Above the 1 million you did the week prior. But you had 2 weeks of sell-offs of 1.8 and 1.4, okay? But on a weekly, you could say you traded higher with volume. But when you get into a shorter-term basis, as the week went on, the selling and the volume came in on Thursday and Friday. Yeah. And we'll see how the day finishes, but we're getting some volume right now. Like I just said, we just did 12,000 contracts in 15 minutes, so you're going to get some volume. We're already at 216,000 on the day, and we're coming back in to test that 2,000 level. You look at silver. Silver, the selling, right off the top. Okay, you break. That's an all-time high on silver on Thursday, 54.41. You can't hold it, okay? You give it up. You trade lower from the prior day. You trade lower with picking up increased volume. The next day, Friday, you trade lower with even more volume. 126,000 contracts versus 122. I'm not sure we're going to break that today at 69,000, but that was an all-time high. And you couldn't hold it. You gave it up. You gave it up with volume, and you got a little. You didn't get a little. You got follow-through on Friday. So, yeah. And I put out a new issue of the Gold Report today, folks. And what I said, okay, and please come check out the Gold Report if you like. Right on the newsletter tab at TFNN. Comes with a 30-day money-back guarantee. But in general, number one, you've had a nice way for the good equities to separate from the bad equities on this pullback. Okay, we've had pullbacks across the board. Some of them more intense than others, some of them with quality volume, some of them with very thin volume. And right now, the way the market's pulling out some of the cuts in the expectations, rates are facing a pressure higher. There's pressure right now on the dollar. Jump over to dollar yen. Okay, look at this run. Backing it up. There's your September 17th. Okay, when our dollar was pushing 96, look at the yen since then, from 145 to 155. So we have yen weakness, dollar strength. We check out the euro US dollar. It's a different story. All right? Yeah, no, not as pronounced, from 119 to 115. Okay, so 4 pennies. But there's pressure right now, and that's causing some short-term pullbacks in gold. But guess what, folks? It's been a heck of a run. It's a natural retracement in a bull market in gold. You just traded on a monthly basis, almost straight line. For a 2-year period, from October 2023 at 1,800, on a straight line move to 4,400. You put that thing on a weekly, we had 2 pauses. You could back it up. That run began on February of 2024 at about 2,000. You consolidated. We really never had a pullback. This is the first time. So, metals under pressure. Crypto under pressure. We're coming back with our man Steve Rhodes, folks. Don't go away. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstadt's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstadt releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. We get the S&Ps off by 85, and we're going to talk right now to our man Steve Rhodes, as we do each and every Monday at 3:15, folks. And if you haven't yet, head on over to the front page of TFNN, right under the Newsletters tab. You'll see Mastering Probability, Steve's daily newsletter. He's got morning updates, afternoon updates. And if you scroll down on that order page, folks, you'll see the many webinars that you gain access to. It's $149 a month. Every one of these webinars that Steve has in here could be $149. The ultimate reversal pattern, overcoming fear in trading and investing, the TD, mastering the TD setup 9 count. I could go on and on, but check it out. You get all those, folks, with his newsletter. It's outstanding. Check it out on that front page of TFNN. Steve Rhodes, good afternoon.
Tommy, how you doing today?
I'm doing well, man. How about yourself?
Good. I was just checking out that Chamber of Commerce weather in that St. Pete area. I see nothing but sun for like all the way through Thanksgiving.
You know what, Steve? So I was back in Boston, actually, late last week, okay? And, man, it's great to be back, you know, in your hometown, of course. And we got some amazing weather up there, especially this time of year, like 46, 49 degrees, sunny, blue skies, beautiful, and a little chilly for Florida. But I come back here, and I was like, oh, my goodness, it's 82 degrees again this afternoon, and it's sunny. And I love that as well, of course. But beautiful, man. It is, for sure.
Yeah, it's a nice 82 degrees. Absolutely. Oh. So I thought what we would do today is just kind of maybe a larger overview of what I'm seeing. And in the first chart that I've got up here, this is a yearly chart. And the top row is the U.S. indices, the Dow, followed by the S&P and the NASDAQ. Just below the NASDAQ is the semiconductor index. The yellow lines, this is a yearly chart. So the yellow lines out there are the highs for 2024. And whenever you trade above a prior year's high out there, you're in a bull market, period. Now, it may top out, it may have topping signals and so forth. So you have to look at it. But what we can see here, and so then the other charts I've got the DAX, we've got the FTSE, we've got the Shanghai, the Hang Seng, and the Nikkei. And we're in a global, and I think I mentioned this to you a couple of weeks ago. We just didn't get to the chart, so I kind of went back through it, for today's segment. But we are at all-time. We are trading above the 2024 highs for all of these instruments, all of these indices out there. So each of these are in bull markets. And in other words, what I would say is money is flying across the globe, and it is just not concentrating in one single country, and therefore, because it's not concentrated in one single country, I can't say that it's the reason why our markets here in the U.S. are at all-time highs or because all the global capital is flowing here. It's not just flowing here. You know, I think what I'd mentioned to you, my take on this is with all the geopolitics that's going on across the globe, what traders and investors are doing is they're investing in hard assets. And hard assets can be gold, obviously, gold, silver, but it can also be companies, which is really what I think is taking place here. if we take a look at the Dow, so one of the things I talk about, as you know, is global capital flows, and that means I take a look at instruments that are priced in different currencies. This is the chart of the Dow priced in the major currencies. When I say major currencies, those that make up the U.S. dollar, the euro, the yen, the pound, the Swiss krona, the Swiss franc out there, but I've also included the Australian dollar, the Chinese yuan, the Canadian luna is part of the U.S. dollar index. Well, it turns out that, so it's great when they're all moving higher at the same time, real bull market. They all also are going to top at some point in time. So I just caught just a little bit of the last couple minutes of your show, but I heard a lot of caution out there. I thought I heard some caution in your voice, and rightfully so. So when everything is moving up, great bull markets. But, man, when they all top on the same day, it's really a cautious tone out there. And it's not just these currency pairs. If I take a look at the Dow, and I'll go back to, but if I take a look at the Dow, the NASDAQ, and the semiconductor index, and these yellow dashed lines out here show that all of these are going to move lower basically at the same time. So we've got to identify. You can see at where we're at right now, I don't have a yellow dashed line out there. But I'm getting pretty close to putting one in, and you'll see as we take a look at these charts out here that we may, in fact, have some type of top that is taking place. Now, if you go back to 2000, where you see these little green lines, we didn't all top at the same time. The NASDAQ and the semis topped us a little bit after the Dow did. Now, if we review the weekly charts, because we were just on a weekly chart here for these three indices, if we go take a look at their weekly charts and we try to identify, is there a top signal in place? If we look at the Dow actually does not have a top in place right now. It needs a further rally. This is the C to D point. All these blue diagonal lines here, Tommy, are the C to D legs of that A to B. In order to be able to squeeze it in a chart so we can see it,
sure,
because you have to go back so far. I just thought we'd take a look at the C to D leg. So the weekly time frame for the NASDAQ 100 does have a sell to D point top, and the semiconductors, the same thing out there. It's just the Dow that doesn't, and the Dow needs a rally and then a bearish reversal candle to confirm that. So it's a little wishy-washy. But when I take a look at the monthly time frame charts, and that's going to take place next Friday, right? We'll have a half a day. Is next Friday Thanksgiving or next Thursday Thanksgiving?
It is.
Right?
I
Yeah,
believe,
next.
yes.
God, time flies, man.
Oh man,
so,
right? It's gonna be December, man. 2 weeks. Wow.
Yeah. So next Friday is when the markets will close, and right now, we've got topping patterns for each of the monthly time frame charts. So we'll have tops out there, and if I take a look at the SOX. And when we do get tops, what we typically see, for whatever time frame it is, their price will pull back to the oscillator and change line, one of the workshops that you had mentioned out there. And for the semiconductor index, that's at about the 6079 level. If you also look at the very bottom portion of the screen here, this shows us where this is kind of the cadence of the market. It shows us consecutive monthly higher closes or consecutive monthly lower closes. If we take the lower closes out here, the normal cadence of the market in a bull market, which we've been in, are basically 2 to 4 bars. And we've just had a rally that's gone on for 6 months out there. So just to see a pullback, like you were talking about gold as an example, heck of a run. You're talking about some currencies. So it's just a normal, pullback. So the first level for the SOX would be this green oscillator and change line. That number is going to change, or it could be a 2 to 4 month pullback. And I think it's the latter that is more likely the case, but I don't know the outcome. I just know what to be watching for, what to look for. And really the same can be said about the Dow. The Dow on a monthly basis is likely going to form a top. It'll be a Rhodes momentum indicator top. But to sit here and say, hey, Tommy, it's going to pull back to that green oscillator and change line, we can hardly make it out because it's so close, in essence, to where price is. Now, that's a level that if we were to close below, it'll tell us that we've lost its momentum inside the monthly time frame. And if we've lost its momentum, we could easily see, as you look at the bottom portion of the screen out here, a 2 to 4 month retracement. Maybe it's just 1 month, but I'd say more likely a 2 to 4 bar retracement out there. So if it's going to be 2 to 4 bars, it's not going to be a very Merry Christmas. But I do have to share
hopefully everyone's aware, like you're talking about, right, that they put a little away when this market's been doubling and tripling in price over the last X amount of years. It's just been a heck of a run, man. I think that's where, and I love your analysis, and that's where I think I fall as well. I agree, as in Man, it's just a heck of a run. You know, we have a NVIDIA $5 trillion. NVIDIA, I think in the last 10 days, it went at one point, it was down $850 billion in market cap over like 5 days. Then it was up $500 billion in market cap. And meanwhile, the market has just been so impressive, and it's just a natural flow. And we haven't had a natural retracement outside of the few notable ones, whether it was tariffs, COVID, and the Fed hiking. Right? Yeah. Those three. Right. But boy, you talk about shaking it off in no time on all those, man. And yeah, so I noticed on that longer term chart you had, you could almost barely see any pullback of making that potential turnaround where we are compared to some of those prior pullbacks. And that's kind of, I think I said, where my spikes go up, right? Saying, man, I had to look twice and say, oh, yeah, that's right now. It looks like we're still sitting to the tick high almost of where we are. Yeah.
Absolutely. And we got the same thing going on with gold. This, as an example, is a chart of gold. It made new all-time highs in all major currencies and all Middle Eastern currencies. Hey, Tommy, great to be with you. Have a great week.
You too, Steve. Thanks so much for the great information. Folks, check it out. Mastering Probability on the front page under that newsletter tab, 30-day money-back guarantee, and you get those webinars as well. Thanks, Steve. We'll talk to you tomorrow, man.
Take care, Tom.
Attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. NVIDIA. We're down by 2.6%, so we got NVIDIA earnings Wednesday. Now, you have Peter Thiel selling his NVIDIA, right? You have SoftBank selling his NVIDIA. Something to pay attention to. And you talk about price for perfection. Realistically, we've just been chopping around since July. Okay, you hit this price level, 183.30. You take a look at the volume. We get up to that high on October 29th. You do it with volume. And then you have some buying at the 180 level. Now, this is a daily. That was a nice turnaround on Friday. See how we come today. But yeah, you're talking about $5 trillion on NVIDIA shares, and they are going to be in focus this week on their numbers. Take a look at the weekly on NVIDIA. That's the daily. Yeah, look at that. Right? It's a perfect A to B, C to D from the acceleration beginning in January when you were at $45, January 2024. It's a perfect 1-to-1. Your B point lines up at the beginning of the year. Your C point is the pullback in April. And you're right up to this price level. And we haven't even gotten a 382 pullback. It's been an extraordinary run. Nobody's ever seen anything like what we've had since April, folks. Okay? And you now have to extend this to the highs in terms of what a 382 pullback looks like. Just a healthy 382 pullback brings this market back for NVIDIA to September 1st. It's going to take a lot to live up to the $5 trillion valuation. Now, you look at the market broader term, okay? You take a look at this heat map. How about the financials? Wells Fargo off 2.4, Bank of America off 2%, JP Morgan off by 1.4, Citi's off by 2.6, Visa and MasterCard red with the market. Google, the big bright spot today with Buffett investing in Google. $3 or $4 billion in Google. A very small percentage of his cash flow, cash available, let alone percentage of Berkshire Hathaway. I think Google now represents 0.31%. Even investing the $3 or $4 billion they put into that. Now, the Russell right now is down 52 points, down 2.2%. You take a look at the Russell. Now, I'm not familiar. These companies aren't going to pop up. But look at these percentages. Anywhere you go in the Russell, 5.7. Not anywhere, I shouldn't say. Healthcare is in the positive. Okay, but materials, that includes whether it's Barrick, Hecla, off 4.4. Barrick's off only 0.5%. Coeur d'Alene's off by 3%. Check out Coeur d'Alene. So they're buying new gold, okay? $7 billion. It's going to create a $20 billion powerhouse, as that headline says right there. But here's the kicker. I got to go back to the day it was announced. Yeah, it was this day. New Gold is below the price that they just got bought out at for Barrick shares. They would have been better off prior to that transaction. That should be one of the biggest red flags out there in the gold market. And, you know, there's a lot of flags just in terms of where we are on the hype right now. You have acquisitions going on, and the company that's getting acquired, New Gold, Coeur d'Alene, okay, is going to acquire New Gold in an all-stock transaction. Now, guess what? Originally, when that got done, you opened dramatically higher. But then the market looked at the deal, said it's an all-cash transaction. Well, guess what? That all-cash transaction dilutes Coeur d'Alene, okay? And what happens is that the shares of Coeur d'Alene that those New Gold owners are getting go from trading from 1766, a high the day prior, to the day after the news trading and closing at 1514. And now you're at 1438 as metals are under pressure. I saw that one, man, the gold report. And it was like, you got to be kidding me. They just agreed to get acquired for an all-stock deal. New Gold did. And New Gold's been one of the strongest equities out there, folks, for sure. Okay? But how do you agree to get acquired for an all-stock deal? Unless you think that your valuation might be a little lofty. Okay, and yeah, synergies and everything that goes with it. A $20 billion metals powerhouse, as that one headline put it. But boy, that one's dicey when you look at trading lower after you get acquired. Coinbase. Whew. Take a look at the volume on Coinbase. So last week it was actually a little bit light. But it's only Monday, and we're going to do 15 plus million shares today, and you did 45 million all last week. You're now below this large bar of volume from June 23rd. We're coming into this little area, and we're into this bar from May 12th when you had extreme volume to the upside. All right, we talk a little bit of market. And this is not the dot-com bubble, right? But there's valuations and there's risks that I don't think are getting priced in. And listen, as a trader, this is what you want, okay? When you can just solve an equation for growth and you can solve an equation for earnings growth and revenue growth and capital growth, there's very little volatility when that happens. But when there's unknown, and the example with NVIDIA, okay? And this just points to that if this is what I look at when I see this type of volatility in an equity like NVIDIA. If there is this much volatility in the market that a company like NVIDIA can go from trading above 211 to below 179, so that's a $32 move, and they have about 24.5 billion shares, which is a loss of almost $800 billion in market cap from November 3rd to November 7th. 96 hours, $800 billion got wiped out. And why did that happen? It's not like they had an accounting failure. They didn't restate their financials. There was just selling. There was a market repricing of the future growth. But guess what? In the 48 hours that followed, they made back $500 billion. It's still a very large percentage of what this equity is trading at. And some of the risks in this market, even if they're only priced in at a 10, I mean, maybe you think there's only a 15% chance that NVIDIA doesn't achieve the growth rate that they're talking about over the next 24 months. Well, is that priced in? Is that 15% chance that they miss priced in? Well, how about this one? What's the probability that we have an issue in private credit? You don't have to call it to happen, right? What you want to think about doing is pricing the probabilities. Okay, and I don't think that the market has been assigning the probability that some of the risks with the circular AI nature and with private credit as well are maybe in there. Maybe we get a little bit of a repricing, which just provides more trading volatility, two-way market, and a better entry forward. We're going forward, folks. We'll come right back.
In the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. So when we go into that break, we're talking about Mr. Gunlick, talking about private credit, and there are risks in this market. Now, I was going to go from this one, okay, because this is the cherry on top. You're talking about private credit, just risks in valuations, okay? Of course, there's some risks in valuation when it's an illiquid private market. Now, how about this headline? Stocks go 24/7 in crypto betting market with 100 times leverage. Could that be emblematic of potential bubblicious behavior? And listen, this is where it's going, okay? As in, you better believe that stocks should be able to trade 24/7 with very little fees. The 100% leverage could be a problem. But these are perpetual swaps. Okay, and when you look at how Bitcoin trades perpetual swaps versus actual Bitcoin. Bitcoin trading volume is much higher for perpetual swaps, or perps as they call them, than spot. You look at the monthly totals, and of the 2.7 trillion that's traded in Bitcoin, 2.2 trillion is traded with perpetual swaps versus actual trading Bitcoin spot. Hyperliquid blockchain, okay? A NASDAQ-linked contract known as XYZ100 has already drawn as much as $60 million in open interest. Another one tied to NVIDIA has generated more than $22 million. The way this works, you post collateral, typically the US dollar coin stablecoin, USDC stablecoin. You open a long or short position on, let's say, the NASDAQ 100. You're not buying the actual shares. This is where you could see things could be problematic if there was really ever an implosion. They're entering smart contracts that track the index's price using external data feeds. If the trade goes their way, they earn the difference, of course. If it moves against them, their position auto-liquidated once their margin runs out. Sounds like most brokerages. A dynamic fee, the funding rate, balances demand between longs and shorts, so the price of that perp stays tethered to the real-world underlying asset. Yeah. And they can lean on oracles and market makers to model stock moves when markets close, a fragile but functional for now setup. "24/7 markets, they're coming." But yeah, the funding rate, you better believe it. When markets close and things become illiquid, right? Bullish weekends push it positive and prices drift up. Fear flips it. Yeah. After hours is murkier. Unregulated. You're dealing with unregulated markets. So check it out. You might suddenly have all of your position completely being eroded by funding. Like unpredictable things can happen when no one else can hedge. You can get wicked out on the weekend of someone's moves of a massive order. Not legal in the U.S. And folks, as somebody that's played plenty of online poker on unregulated online poker sites that are offshore, you better believe that that money's not yours until you get it back when that's existing, if you are on any of those platforms somehow. But yeah, how about that headline, right? Trading stocks 24/7 with 100 times leverage. Get ready, folks. So we got NVIDIA earnings Wednesday. Jump over to NVIDIA. And we're looking at about a $12 move in either direction for their earnings. We take a look at this week's option chain for NVIDIA. And yeah, so their earnings about $12.41 priced in if you want action throughout the entire week. It's about $14.36 move in either direction, or about $7 if you're going directionally at the money put or call. Jump over to Google shares. So Google's up by 3.1%. We gave up all that initial acceleration on the open. Yeah, we're bumping up into this selling from October 30th. All right, 48.5 million shares. That was the day after their earnings. Okay, come out with the earnings. Next day, huge volume, but you gave it up. And that's what we're coming into right now. Take a look at the weekly. It's a nice upward day, but look at, we've drifted higher on lighter volume on a weekly after their earnings. These companies just have a little bit of work to do to come into their earnings and the valuations. Yeah, they're posting about them dumping Bitcoin in the den. Are you hodling? Is everyone hodling? Holding on for dear life? It's been quite a run. And again, this is not a doom and gloom that, you know, Bitcoin is not real. You better believe it's real. Stocks should be trading 24/7. Okay, they should. It should be a liquid market facilitated instantly. The first time I had an experience with Bitcoin was playing online poker. And I remember the next day I came in and I told my dad I couldn't believe it. Okay, I couldn't put money on this site. It was an unregulated offshore site, I think based in the Dominican Republic potentially. One of those, or Isle of Man, sometimes they are in, but I think Dominican. And they couldn't process U.S. financial transactions, of course, but guess what I could do? And you can see why regulators should be all over this. And they have since... I'm talking about when Bitcoin was back at like 4,000. Let's see when I had to go. It's probably was even as it wasn't even a future at that point. Yeah, no, maybe it was. It was. Yep, it was 2019. That's when it was. Because I remember that I was making transactions, and then all of a sudden, I was making transactions and getting a lot less Bitcoin. And long story short, I started from scratch. I didn't even have a Coinbase account. Created a Coinbase account, deposited money using my U.S. bank institution, got Bitcoin, sent the Bitcoin to the offshore unregulated poker site. They turned that Bitcoin immediately right back into U.S. dollars. So I wasn't a holder of Bitcoin. It just facilitated the transaction. My dollars to Coinbase, they gave me Bitcoin. I sent the Bitcoin to the online poker site. They gave me back the dollars in their account on the register. It was like 5 minutes, and I couldn't believe it. And there were fees, of course. But that's because I was dealing with unregulated poker sites, right? And within the Bitcoin ecosystem itself, not really. So it is going to happen. And the securitization, right? The tokenization of securities is coming for sure. And why not tokenize securities when the S&Ps just traded from 3,500 to 7,000 over the last 3 years. And the NASDAQ just traded from 10,000 to 26,000. Now would be a good time to securitize securities. We're coming back for the end of the show, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com and hit Watch Tiger TV. That's TFNN.com. Then hit Watch Tiger TV.
Welcome back, folks. And yeah, they're talking about Christopher Waller. And yeah, Fed Governor Christopher Waller. Well, guess what, folks? He's on a short list as well. And you could say he's in the short list because he agrees. But if he's on that short list to be in the next chair, he's talking about cuts. And today he's voicing his support for another interest rate cut at the central bank's December meeting, saying he's concerned over the labor market and the sharp slowdown in hiring. So we're going to see. December 10th is the meeting. And as I mentioned, though, the odds right now, only a 43% chance that they cut, priced in for swaps. 57% chance they stay where they are, pretty close to a 50-50. But yeah, he was one of the 5 that the Treasury Secretary confirmed was on the list to replace Chairman Powell. It was him, Michelle Bowman, who's another Fed governor, and then National Economic Council Director Kevin Hassett, former Fed Governor Kevin Warsh, and BlackRock executive Rick Rieder. But nonetheless, he's out there. Now, you jump over to yields, no move at all. You get a little bit of a move here. Okay, coming into 3 o'clock with some volume. but no real action on yields as the market catches a little bit of a bid. Dollar right now, 99.55. Gold bounces from 4,010. Gold off by $56, off by 1.4%. Silver off by 1.5%. And yeah, we get NVIDIA earnings Wednesday, down by 2%. You jump over to Amazon, under pressure today, down by 0.8%. Holding out well compared to the rest of this market, though. Microsoft off by 0.7, and it was $4.3 billion was the number that Buffett invested in Google. $4.3 billion was that number. Let's see. There it is. Making it the firm's 10th largest equity holding, but as I mentioned, I think I heard somewhere today about 0.31% of that portfolio. And yeah, he's got, what is it, 300, 400 billion in cash, something like that. And he puts 4.3 billion to work for Google. The stock trades at 25.5 times next year's earnings compared to Microsoft at 32, Broadcom at 50, NVIDIA at 42. He's going for value. Folks, thanks so much. Have a great night. Have a safe night. We'll see you tomorrow morning for the morning market kickoff at 9 a.m.